Welcome back to the Infinite and Beyond MIT Alumni Show. I'm your host, Rob Kalwarowsky, and as always, we have a special guest with us, Course 14 2013, the founder and managing partner of Sugar Free Capital, Sheena Jindal is with us. Sheena, how are you?
I'm good. I'm so excited to be here. Thanks for having me.
Thank you for joining us. Now, Sheena, to kick us off, can you tell us a little bit about your journey from graduating MIT in 2013 to where you are today?
Yes, absolutely. So I grew up in the Boston area, went to MIT undergrad with this intention of starting a business in college. At the time, I really wanted to build something in e-commerce infrastructure, essentially allowing for virtual try-on. And although that is an incredibly challenging thing to do, I mean, it's remarkable 15 plus years later, we don't have technology to do this. One thing I really realized about MIT is nothing seemed impossible. It was always, I know this is really hard tech, but we can find a way to do this. So that really got my entrepreneurial kind of bug going. I did the more traditional thing after college. I worked at BCG for a few years after an internship. I then joined an e-com infrastructure startup backed by Bain, CRV First Mark out in the Bay Area in 2015, kind of got my first taste at Silicon Valley, and then was fortunate enough to start my investing career just a few years later. I was lucky that I got to intern with Bessemer when I was in business school, really learned two things there. One, find your edge and venture early and really lean into that. And then two, it's a lot more fun to invest in sectors and categories that others aren't hunting in just yet. Was fortunate enough to join the team over at Comcast Ventures as a principal in 2019. Honestly, got incredibly lucky. Ended up leading about a dozen or so deals at the firm, got promoted to partner in the summer of 21. And that's when I kept referring to investment opportunities as being too sugary. It was frothy markets. And I just kept saying, gosh, everything I'm seeing right now, valuations are super high. And a lot of these companies and ideas are just kind of hyped up on sugar. So fast forward a few years later, decided to launch Sugar Free Capital, an early stage firm based here in New York City, investing in all MIT technical founders.
So Sheena, you mentioned something here about what's your edge in investing and the sectors. Can you tell us more, like what's your edge and what sectors are you interested in?
Yeah, absolutely. I think for us, we have a pretty nuanced point of view of where we find outsized founders. And for us, that is MIT. We really love that profile. So it's not a requirement, but about 80% of the portfolio is MIT founders today. And in that going back to kind of the inception story for the firm, in that 2021 era, the sugar high, what I really noticed is as we came out of the sugar high hangover, it was the MIT founders within my portfolio that were outperforming. They had really built something of technical value, of substantive value. They were able to do a lot with very low cash. And I really started to recognize that the MIT systems engineering mindset really was world-class and something that really could build an enduring company and an enduring profitable business. So we really decided to laser focus on this ecosystem because we really feel that it's a prime opportunity for founders of this to be building startups kind of in the AI native era. So we're spending a lot of time around things that require a systems engineering mindset. So think infrastructure, think hardware that's enabled by software, think frontier technology. And what we love working with MIT founders is their life's work is building something that actually works and has impact. And they will run through walls to make that happen.
Sheena, you mentioned the MIT founders or just were outperforming. Like, what makes the MIT founders great entrepreneurs?
Entrepreneurship, when things are going well and markets are frothy, is kind of this desired job. It's cool to be a CEO, and I think there's a lot of founder tourists in those markets. I think what people have to remember is when you are a founder and you're an entrepreneur, you are responsible for investors' capital, employees, customers, and you can't really walk away from those things when things aren't going so well. And so, I think MIT, as you know, has this funny acronym, IH
FP.
I just want to mix it up. And as you know, for both people, there's two kinds of people, and that kind of have two different variations of the interpretations of that. And I think that's exactly right with respect to being a founder, right? There is a level of grit and tenacity and just kind of hunkering down when things get tough that I really think MIT does a fantastic job with, in a way that just quite frankly is very hard to match in other places. I mean, MIT is not this beautiful campus with palm trees. It's pretty gray. Boston's pretty cold, and people are competitive and work really, really, really hard. And I think that does well. And one thing I have to say about MIT is it's very much a meritocracy. You see that in the admissions process all the way through graduation with jobs and the types of classes you take and the relationships that you make at school. And so I think founders that are meritocracy oriented hire incredibly well and hold everybody to the same standard they hold themselves to.
I love that. I also, it's funny you mentioned that, because most of my work right now is teaching people how to navigate corporate politics to succeed. And that's going beyond just like delivering good results and working hard, which I screwed up early in my career because that's what I thought mattered.
Yeah.
And then I got punished for that.
Yeah.
Absolutely agree with you 100%. And like the tenacity is another thing is I was talking to, I'll shout out Mark Arts last week, and he was talking about like working with people, and he just said like flatly, like MIT people just work harder. We keep coming back to it. I leave the community, and every time I get back to it, I'm like, it feels like home.
Yeah, exactly.
Sheena, one question, right? Like you mentioned the market being really frothy or having lots of sugar in it. Like when you're looking at AI investments now, like what distinguishes you from like just like the ones that are kind of like using one of those core models that everybody uses and it's kind of nonsense but overvalued, versus like technology that's really game changer?
Yeah, someone just asked me earlier this morning, what's an antithesis that you guys have? And I actually think one thing we believe in is that there is technical defensibility. There are certain things in the world that are being built by teams that there's really only one of five in the teams in the world that can be doing this. And so I think for us, when we're assessing opportunities, that's really something we want to understand very early on. Is this really challenging to build? And the other four teams, probably two of them are already at the big frontier labs, and the other two are probably at an Apple or a Google or whatever it is. And they maybe don't have the entrepreneurial DNA. And so for us, when we're thinking about kind of separating wheat from chaff here, we're really oriented around, is this complex and is this defensible from a technical perspective? And that also means there's quite a few businesses and categories that we just quite frankly spend less time in as a result of that, because it has become so much easier to build software.
Sheena, of course, one of the questions that I have for you is roughly, I think it's like 75% of founders get fired by their investors or get fired before they make it to exit. Like, what are some of the reasons why founders don't grow with their companies?
That's a great question. I think, although it's never ideal, to have to make a CEO switch, the instances in which I have seen it, which are few and far in between, I think really come from two different things. I think one, going back to that grit, tenacity, commitment component, there are certain founders, right, when things get tough and they've kind of been at it for 4, 5, 6, 7, 9, 10 years, you can start to see the exhaustion and kind of the wear and tear kick in, where someone is just saying, I'm really not 200% committed like I was before. And that's tough, because in this market, you've got to be moving really fast and at a pace and velocity that is unmatched. And I think the second probably happens when you see a founder is just incredibly kind of tunnel visioned on building the business that he or she had kind of started out to build at the very beginning, not recognizing that the market around them has changed. So those are probably the two factors. But ideally, investors should be underwriting CEOs that they believe in. And that's what we do. Like we are one of the first questions we ask ourselves in a first 30-minute meeting or coffee is, do we believe this person can ring the bell at the New York Stock Exchange in 10 years? And that's very much a lens we take because we do believe founder-led businesses are the ones that do end up persisting and succeeding. It's never the same when you have somebody else coming in to run it later on.
Yeah, I like that thesis. I think for like in my work, I see there's a transition point where folks need to transition from I'm the smart person who figured this out to I'm a leader. And
Yeah.
some folks get stuck in that space, and I work with that a fair amount. The
Mm.
other one is exactly what you mentioned. There's a combination of like burnout, mental health, motivation, and
Yeah.
mindset, which all kind of like fits together. But definitely, like if you're a founder, taking care of yourself physically and mentally is super important for you to hit success.
Yep. Exactly.
Sheena, one question, like if there was founders listening and they're looking to raise money, like what are some of the top strategies that they can go after?
I think with founders, especially in this market right now where it seems that capital is quite abundant, I think there's a few things I think VCs really want to feel when they're investing in a founder and a company. One, at least for us, we really want to feel like it is your life's work. Like you were put on this earth to build this business, and like we couldn't imagine you doing anything else. And that can come from I've kind of lived, slept, breathed this problem for a long time. I've been thinking about this for a long period of time. I've done research here, over periods of time, but it's less around, I just kind of woke up one Saturday morning and had this idea and decided to quit my job on Monday. But it's more so, there seems to be a really unique thesis of why this business and quite frankly, why you. And I think the second is, people do want to feel that you're going to be a responsible steward of capital. And I think that has gotten lost in many elements. But I do think people want to feel they can trust you, that there's high integrity, that you'll kind of under promise and over deliver. And I think just all of those basic facets of just genuinely building trust and being a high integrity person are quite important. And founders should use their opportunity with investors to kind of demonstrate signal of them being those things.
I think, I mean, the whole trust piece is super important. And the interesting part here, right, is often I get asked how to build trust with leaders and their teams. And there's lots of different frameworks for trust, but the most important piece of trust is it's not how I perceive myself, it's how you perceive me.
Yeah.
And so building the self-awareness of how do I show up in the world and how other folks perceive me is the biggest key out of all of it. But a lot of it is like being aligned in what you say and what you do, and like small actions every day are really important for trust building.
Yeah, I couldn't agree with you more. I think something that people and founders, particularly like over a Zoom call or things like that, where there's less body language, there's less kind of signal to work with, is every little interaction matters. Showing up on time. If someone's kind of directing you around certain types of materials or questions, honoring those and kind of making sure you carve out space for that. It should feel like a two-way conversation, but just remember that you're kind of being assessed in every single one of those moments.
Sheena, well, I want to turn the table a little bit. And like, if you're an entrepreneur and you were raising money, what would you look for from the investors that you're taking money from?
Yeah, it's a great question. So I think, even as I was building Sugar Free and fundraising for the fund fundraising for our first fund a few years ago, I think I took a very naive approach to it, which was I thought about it the same way I would expect a founder to think about building their capital or their cap table. So I think, going back to our conversation around working with high integrity, high trust people, I think that's incredibly important. I think too, thinking about a firm's strategy with respect to short-term versus long-term commitment to you is really important. So there's a lot of easy capital that's very much like easy come, easy go is how I think about it, especially at early stage. So you can easily throw together, a party round of 5 or 10, 250, 500K checks. But at the end of the day, when you're thinking about kind of longevity for your business, I guarantee 9 out of those 10 firms likely won't be thinking about writing a second or third check because their strategy is very spray and pray. So be very intentional if you're trying to kind of establish a long-term financing relationship or something short-term. And then lastly, there's a lot of really well connected firms and GPs. And depending on who their limited partners are, depending on where they came from before, they may have outsized relationships in ways that are kind of hidden underneath the hood. They may not be on a firm's website because they can't publicly disclose them. But I really would kind of put investors on the spot and ask who they're backed by, how those relationships can be helpful. We were very intentional with respect to Sugar Free on that front. And I think it's paid off in spades.
Yeah, I 100% agree. Like, I mean, as somebody who hugely believes in relationships, I think that's one of the things that investors or anybody basically can be helpful in is like, what is your business? Who do they know? What are potential partners or customers or advisors or anything? And I mean, that's the reason why we built this show, is to really bring the community together. And so on that note, Sheena, like, what goal are you trying to achieve and how can the community support you?
I mean, my life's work is, Sugar Free will probably be the last job I ever have, right? And I'm incredibly fortunate to have found that relatively early on in my career. But, my life's work is very much to be investing in really fantastic MIT founders. And so for us, if there's folks that are exceptional that you do meet, we'd love to meet them. And I think another aspect which was surprising to me kind of as I started to build Sugar Free, and now that we're about 2 years into the firm, is the amount of connecting the dots we're able to do. Given the number of alums that I speak with, both whom are founders and then those within our LP base, I'm amazed at the amount of connections that are possible within and amongst the MIT community. So if there's things that folks need with respect to hiring, introductions, solving XYZ problem from a vendor, whatever it may be, we probably have some connective tissue within our cohort that can kind of help support and enable that. And I think it's one of the greatest advantages, I think of MIT is you've got really tactical, smart people thinking about these things all the time. And so, hopefully we can at least help with that.
Yeah, absolutely. And obviously, if you want to reach out to Sheena, I've dropped her LinkedIn in the podcast notes, or you're welcome to reach out to me and I'll connect you. But yeah, if you're looking for connections to support you and your goals, definitely reach out. We can definitely help you with that. Sheena, I have to ask you this because I wrote the book on capitalizing on chaos. With all the chaos in the world, how do we capitalize on it?
I think there's, the beauty right now is there's a lot of groupthink, and there's a lot of like Twitter and podcast content that is quite consistent. And so I think if you can actually kind of keep your head down sometimes and not just be following kind of the herd mentality there are some fantastic pockets of opportunity that I do really think will drive alpha in a portfolio of returns right now. And I think the other thing that I've also been thinking about is, a lot of folks kind of seek venture for some of the ridiculous kind of alpha at the 10, 20, 100x returns. This is a very unique moment in time where we're also seeing those opportunities live in the public markets. And so I think, being really disciplined around which asset class you're seeking for which type of return profile is really important, but also being flexible given the fact that there are probably opportunities that are not going to be as interesting in a 10-year illiquid hold in venture, but probably you can get access and exposure to in the public markets. So that's something I've been thinking about a lot with our portfolio construction as well. Is although we may want exposure to certain types of companies, I actually think there's probably more lucrative opportunities in the public markets right now for limited partners or investors there that may not capitalize, that may not be realized in privates.
I want to ask you so badly what they are, but of course, we won't do this on recording. I do want to ask you, though, Sheena, like you mentioned, there's a lot of groupthink out there. Like, what are some of the spaces you're seeing a lot of groupthink in?
Yeah, I think, as you can imagine right now, venture's kind of chasing a few different threads around chip design. I think memory, obviously, critical minerals, mining technology. Like there are firms that were pure play software consumer fintech only that have decided they're going to make, huge lead check investments into certain deep tech categories like mining technology. And that kind of whiplash is going to be challenging, for their limited partners if they're not able to return capital in the areas that they were otherwise had been excelling in for the last 30, 40 years. And so when you start to see firms that had totally different strategies make a complete 180, I think you're kind of seeing some peak frothiness. I think deep tech right now and hardware is getting so much more attention and higher valuation multiples than software, as we know right now. And these were categories that most VCs, I think 95% of VCs 5 years ago would have told you they would never touch hardware. And so it is kind of funny to see this 180 happen in the market. That being said, I think there are certain software opportunities right now, particularly in regulated industries, that are probably quite undervalued because people just have fatigue with software and it's not the cool, shiny object.
When you mentioned mining, are you talking about mining like minerals, or are you talking about like cryptocurrency mining?
Mining like minerals.
Okay, interesting. Yeah, I want to dig more there because I used to work in mining, but we'll talk about that later.
Yeah.
So, Sheena, last question here before we get you out of here. Like, who would you like to meet in the MIT community that would be helpful for you?
That's a great question. I think twofold for us. I think one, there's a lot of really well-respected kind of like Fortune 500 CEOs or Fortune 1000 CEOs building across or working in, industries that are super critical to our infrastructure. So think defense tech, think space tech, think probably some of the more traditional like manufacturing type businesses. I really wish that we could have a bit more connected tissue with kind of that tier. Knowing that MIT's engineering roots means that there's a lot of really phenomenal people in leadership roles and decision-making roles at those types of companies. And then two, I think we'd also love to connect with folks that are really great kind of talent whisperers. One thing we've really noticed about our MIT portfolio companies is they love hiring other MIT engineers, just given the meritocracy component that we mentioned. But there's only so many sometimes you can hire or that they know in their immediate first degree of relationships. And so we'd love to meet more people that have connected tissue kind of across the classes, across age ranges. And that would also be fantastic.
Please. Amazing. Everyone out there. So if you want to check out Sugar Free Capital, you can just go to sugarfreecapital.com. I've dropped the link in the podcast notes. And if you want to connect with Sheena, I've dropped her LinkedIn in the podcast notes as well. And so everyone, thank you so much for listening. Sheena, thank you so much for joining us.
Thank you so much. This was so much fun. I really appreciate it.
Everyone, it was amazing having you, Sheena. Everyone, thank you so much for listening. And we'll see you all next week.